Good afternoon, and thank you for tuning in to this webinar on the state of UK broking. I'm Dan King from Insurance DataLab, and today we'll explore the forces shaping the sector, from the continuing impact of consumer duty and the regulatory burden to the economic and geopolitical uncertainty and the effect of the Labour government. For those who may be new to Insurance DataLab, we analyse the performance of individual insurance companies and provide a wide range of data and insights about them on our benchmarking platform, which supports business placement, compliance, and strategy. Before I introduce our panel, here's Matt Scott to talk about the key findings of our new report on the financial performance of UK broking firms, which was published last month in association with BIBA and sponsored by SSP. Hi, Matt. Can you tell us a bit more about tell us something about what this research is about, please?
Yeah, sure. Thanks, Dan. And yeah, good afternoon, everyone. So this is actually our fourth year of looking at the financial performance of the UK broker market. And as we have in previous years, the research is based on an analysis of more than 100 company accounts. And we focus on three core pillars that we believe best reflect a firm's financial success. These pillars are growth, profitability, and productivity. So each broker receives a score for each of those three pillars, and we then combine those to produce an overall broker performance rating. When we look at growth, we assess the changes in revenue and also profit over the past 12 months. Profitability is based on the 3-year EBITDA margin. And then for productivity, we look at staff costs as a percentage of turnover and also turnover per employee, and both of those are over the last 12 months. To be included in the analysis, brokers must have filed full accounts at Companies House for each of the last 3 years, reported positive revenues in each of those years, and also employed at least 10 staff as well.
Thanks. And what are the results telling us?
Yeah, so as we're going to hear later on, the market's faced a number of challenges recently, but brokers have once again delivered a strong set of results in this analysis. The average Insurance DataLab broker rating for 2025 stands at 53.3%, slightly down on last year when it was 53.7, but that was a record high, and it's still ahead of 2023 when the rating stood at 52.5%. This slight dip comes amid a softening market and also growing costs of compliance, which are likely dampening some of the momentum we've seen in previous years. Yeah, I'd say the headline figures still reflect a resilient sector that continues to perform strongly across our three key pillars. The growth pillar fell a couple points to 52.6%, and brokers continued to post improvements in profitability. The average profitability rating actually reached a record high of 54.6%. Productivity's held steady, I'd say. Hasn't improved that much, up just 0.1 percentage points, but still sits strong at 51.9, which is up from 49.6% a couple of years ago.
Thanks. And what about individual broking firms? Who are the standout performers?
Yeah, so we're recognising 10 brokers this year that have achieved outstanding financial performance and have significantly outperformed their peers in the market as well. And we're delighted to give each of those an Insurance DataLab Gold Award again this year. Top of the rankings is Somerset Bridge Insurance Services, highly impressive score of 79% this year, securing their first Gold Award. And they're also the most improved broker as well, so very well done to them. Other award winners include RAC Financial Services, JCB Insurance Services, Dayinsure.com, Roanoke International Brokers, last year's winner, General Insurance Brokers UK, and Avantia. And all of these are serial award winners from this research. There's also some first-time winners this year. These are Jenston Group, One Call Insurance Services, and Aon UK. And Aon were the only kind of supersized winner, those with revenues of more than £500 million to pick up an award this year.
Fantastic. Well, a huge well done to all of those top performers. And how can people find out more about the research?
Yeah, so a free digital copy of the report will be sent to everyone watching today as part of the next edition of our newsletter, which is due out later this month. But if anyone would like to see it sooner, it's also available to download on our website. The report also takes a bit of a closer look at the overall performance of the market with breakdowns by company size and also an in-depth analysis of the highest scoring businesses. Company level ratings are also available to subscribers to the platform. And we also offer tailored reports for non-subscribers that benchmark performance of specific businesses across the different metrics that we look at.
Brilliant. Thanks for that, Matt. Now, joining Matt on the panel today, we have Zach Gray, Chief Executive of PIB Group's Specialty Division, Jane Kielty, Chief Executive for the UK, Ireland and South Africa at Aon, Laura Scarpa, Partner at Deloitte, and Graeme Trudgill, Chief Executive of BIBA. Welcome all, and thank you very much for making the time to be with us today. Now, we'd like this to be an interactive session, so please submit questions in the Q&A tab on here, and I'll put as many as possible to our panelists throughout the discussion. But Jane, turning to you first, we've just heard that Aon has come out really well in our new research. So as Matt said, Aon's a top-ranked broker with revenues of more than £500 million. So many congratulations. So turning to you particularly here, what do you think makes for a best-in-class broking firm?
Thanks, Dan. Yeah, and no, we're very excited to have had the profile from your study. So thank you for that. Do you know what I think makes a brilliant insurance broker is being absolutely brilliant for clients and focusing on that. And if you focus on making your clients more successful in any way that you can positively help them, then I think that's sort of, you know, the rest sort of takes care of itself. We've got a brilliant team at Aon as well. You know, I think our colleagues care enormously for clients, and I think once you've got that culture, you know, people are always trying to do their best to make our business better and to continue to improve it.
Okay, thank you. And Graeme, you obviously represent all types of insurance brokers. What do you see as some of the key attributes of a successful broking firm?
Well, congrats to Jane. I would say it depends whose angle you're coming from. So from the regulator, you're looking at, as that broker, customer centric, you know, what are the customer outcomes? But then I think of other areas. You look at Saab, the old car maker. They were very focused on their cars. They over-engineered them, so they did everything for the customer, but they went bankrupt because of it. So I think looking at the other fundamental things a broker would need to do, it's that understanding their clients' exposures, have a good range of insurer agencies, good relationships with those insurers, focus on your renewal retention, your longevity of your client relationships. I remember when I was a broker, it had to be 95% or above, otherwise, you know, it wasn't good enough. But equally, new business conversion, you want good productivity, so you don't want to be churning and not converting those. So you've got to focus on that and good compliance with the FCA. And I would say from the client's perspective, they're going to want great service, particularly if there's a claim. Again, before the dawn of mobile phones, brokers, when I first joined a broker, they would give out their home phone number to their clients saying, if anything happens in the night, give me a call. So I think that service that the broker gives is so important to be successful. Nowadays, I think brand is really important as well. If people are looking online, you want to have a recognized and respected brand. And of course, clients are looking for that advice, that choice, that guidance, and that advocacy that brokers give. And then just to carry on a little bit more, I would say a good broker would invest in their staff, in their company. So staff retention would be important, but also focusing on a talent pipeline to bring young people in. Obviously join a great trade association and also focus on sort of technology going forward. AI is looking to be fairly transformative for our sector. And I think we also have some brokers who have great specialisms. So they might have an affinity scheme. I think they are particularly successful as well. So there's a lot of ingredients that go into the pie of great attributes. And if you can focus on all of those things, then what Matt said about the sort of the data lab pillars of growth, profitability, and productivity, they should all come if you can focus on all the things your clients want, what the regulator wants, but what you want to achieve yourself in your business.
Great, thank you. And Laura, same question to you about what makes a successful broking firm. Anything to add to what Graeme's just said there?
Yeah, thanks, Dan. I was going to come at it from a slightly different angle. So I did quite a lot of work on M&A transactions. And so sitting in the eyes of the buyer or investor, I think something that's quite important is a firm's ability to confidently articulate their organic and inorganic growth story. So I think it's about having the data to have one version of the truth when it comes to the numbers. So That needs to be across legal entities, across geographies, be that the customer numbers, the policy per customer, remuneration, complaints. I mean, the list goes on. But I think that really helps give management the confidence and the ability to articulate their business strategy, to manage their business, and also, more importantly, to sort of identify any issues almost before they arise, which is much better outcomes for customers, regulators, as well as, you know, being attractive to investors. I think if we look at 2024, if we look at that M&A landscape from a deal perspective, we saw quite a lot of bifurcation between the top assets going for really high valuations and the lower quality businesses who found some processes quite challenging. And I think that ability to articulate the story and demonstrate that with numbers was part of why some of those processes fell away. But I totally agree with Graeme that you can't be a successful broker without having the customer front and centre. That needs to be a key part of your decision making. And you need to be able to evidence that in the firm's culture as well as the MI. And I think that can be a real differentiator.
Great, thank you. And Zach, anything to add to that from your perspective?
A little, yeah. It was rather like playing bingo as everybody picked off my my points. Thanks for letting me go last, Dan. I think Jane made a really good point that actually putting the client front and center is a key part of what a high performing broker should do. And I think Graeme touched on this as well. It's about the retention of those clients, and I think that also applies to people. I think the quality of the people and the clients that a business looks after, and the retention in both instances. So if you've had clients for a long period of time and people for a long period of time, and you have that stability, generally speaking, the financial metrics that Matt talked about in terms of, which I think are key, and anybody looking from the outside looks at profitability, growth, productivity, but actually it's beneath that's the important bit. I think the other side, I think that is demonstrates a really strong performing broker is really sort of feedback from peers, feedback from the market. And I think my litmus test really is how easy it is to win business from them. So if you've got a broker that you're looking at, what's the quality of that insurance broker, go and try win business off them. If you can't win it, then there is a begrudging level of respect that they're doing things well and that they're a good performer. But it's got to be clients at the center, and it's got to be making sure you've got the people who can deliver that client service, that they're looked after, invested in, and that overall you give a great client proposition. I think the next stage to that really is how you innovate and how you deliver that client proposition. And I think we'll may talk a little bit later about data and some of the analytics about how we deliver some of that. But they're the key pillars for me.
Okay, great. Now, obviously, we can't discuss the broken landscape without talking about regulation. And there's been plenty of that recently, legislation and all sorts of stuff. Although, as we heard in this morning's FCA webinar, the regulator is trying to be clearer about what's expected from fair value assessments and looking to simplify some of the rules. So turning to you, Laura, did you have any particular key takeaways for brokers from what the FCA was saying this morning?
I think it was sort of welcome clarity from the FCA on the webinar earlier about the consultation paper 2512. It delved into some of the detail and a little bit more around some of the reasons why they're focusing on these areas. I think one of the key takeaways for me was around this clear intention to deduplicate some of the activities that we've seen both manufacturers, co-manufacturers and intermediaries do when it comes to product governance. I think that there's a lot more focus and rhetoric in the webinar about a more risk-based process and being able to evidence outcomes rather than I think what we've got on a bit of the hamster wheel of getting more and more granular data and MI and sort of evidencing everything to the nth degree, when I think they're looking for firms to stand back, take a sensible approach to things and sort of document their findings with evidence. So that element's not going away. But that I think it was quite reassuring to hear their messages today. Yeah, I think the other thing, sorry, go on.
No, after you.
I was going to say the other thing I think that's quite helpful is just to align the definition from the contracts of large risk definition that they had when it came to consumer duty to better align to the definition used by FOS for some commercial insurance customers. So I think great alignment of those two should make things a bit clearer about how firms look after sort of commercial customers. So generally, I thought the principles and the proposals were all very sort of common sense. I don't see it as a game changer in terms of a change in approach from the regulator. I mean, they're still very focused on conduct and looking after customers, but just giving firms a little bit more trust in terms of setting their own guardrails when it comes to doing the right thing. I think maybe more importantly, and stepping aside from the consultation paper, I do think with the pressure and the focus from the government, I do see this could be a bit of a tipping point in terms of the likelihood of new regulation. I think the hurdle now that the FCA is going to have to jump over to introduce new regulation will be quite high in terms of identifying real customer harm. So I think we could, although the intention to sort of focus on customers will still be there, we're not going to get loads of reams of additional regulation in the years to come. So I think that's a longer term positive to take away as well.
Yeah, okay, thank you. Now, we've actually just had a question come in about today's FCA webinar, so it's probably now is a good time to ask it, and anybody feel free to jump in to answer it. But the question is, was the FCA webinar today really just clarification that the FCA will reduce the areas of regulation that they're unable to police effectively? I'm not sure if anybody wants to answer that. If not, we can skip and carry on.
I mean, from my perspective, that it's not just what they can police effectively, it's what is also, I think, going to help business. And with this new Labour government, they want growth. And our strong view at BIBA is, as you can see if you've ever read our manifesto, which is full of things that could change with the regulation to achieve growth. So I think, for example, reducing the scope of the consumer duty down to eligible complainants under the definition of the Financial Ombudsman Service is incredibly helpful. We've been lobbying for that extensively, and so that will relieve the burden from the market. But actually, it's the right thing to do because the consumer duty should have a focus on consumers. So I think it's actually quite well thought through. We brought the FCA on our regional tour with us around the country. They met 900 brokers. They've been in to meet our advisory boards and committees, and I think they've actually got now a pretty good understanding of the sector, because for, was it 12 years we've had the FCA now, and we've had new rules and requirements coming out continually throughout that period. But what we have now is a turning of the tide, where actually, because this government want growth, because we are one of the most, if not the most expensive regulatory system in the world, then now is this sort of golden opportunity that we have to make a difference. So I think it's a month today this consultation closes, and so please get all your thoughts into BIBA about which ICOBs should be removed, the easing of the fair value assessment process, the scope of the consumer duty, all those points, because it is, maybe it's not a complete game changer because it's not taking out a lot of rules, but it is helpful to our sector, and it's definitely a turning of the tide where we should see a more cooperative regulator who's working more closely with the sector to understand what does and doesn't work for us.
I think, sorry if I could just jump in there,
please do,
Dan.
yeah.
I think there's a point there that you made, Graeme, which is that there is a responsibility on us as members of BIBA to work with Graeme and give him the feedback that helps him and the organisation seek improvements. We're all very good at potentially complaining about what happens, but if we've got an opportunity to influence, and this feels like an opportunity to influence, as Graeme says, we've got a government who are talking about growth. We've got a CEO of the FCA who is keen to see us move in that direction, and it does feel we're at an inflection point. We welcome all that positive feedback, but it's really important that promising messaging turns into action and that we see real positive changes in our industry.
Yeah, thank you. And Graeme, just going back to you for a second, because I know you've talked a lot in the industry, can be very vocal about the disproportionate level of regulation that brokers are having to deal with, which seems particularly unfair on those smaller firms. Is there anything, do you think, in terms of the progress you're making with the FCA that could be particularly helpful for those smaller firms?
I think one of the things smaller firms raise with us most of all is the level of reporting they have to do for the regulator. So we had a small broker from the north saying, I had to do 47 reports to the FCA in the last year. And that's ridiculous for a small firm. That twice a year RMAR should pick up most of the questions, avoid duplication, but all these additional questions that have come in. And I think the consumer credit, the questioning that now is in place is really over the top. And so we have been complaining about that. We've been working with the FCA, and just recently they came out with the latest paper, and they're actually, I think we counted 57 questions that they are removing. So that's really positive, but we need more of that. What we want is streamlined regulation, particularly on things like reporting. But I'd say the other thing is authorizations. So if you're changing from an AR to a full broker, or if you've got a broker who's changing a senior management function, that can take a really long time historically. So we've been meeting with the Director of Authorizations at the FCA, and we've put forward a load of member ideas about what can we do differently. So, if we can get firms trading quicker, faster, then that's going to help with the government's growth agenda. So to be fair to the FCA, they have set out a number of improvements to us that they're going to make. They're going to rationalize some of the forms. They're going to have a new IT platform. So you're right, small brokers, I think, struggle more than most, because the research that we did with London Economics showed that 1 in 4 staff in a small broker effectively has to be full-time on regulation. But if they can help with authorizations, if they can help with reporting, if they can reduce the scope of the consumer duty, if they can make the fair value assessment process easier, then that's all really going to help small brokers.
Okay, thank you. And obviously, Zach, PIB probably can't be classified as a small broker, but with the increased regulatory workload, particularly around consumer duty and product governance, how is PIB coping with it?
Yeah, interesting, Graham's last point, because up until eight years ago, I was that small broker in the north, and then we became part of PIB. The reporting that we're required to put together is significant. I don't, we know it's got to be done, and we know, compliance is a really important part of our industry and our sector. I'm really lucky now in that, because I'm part of a quite a big business, that we have a team who generally just get stuck into this and just get it done not for us, but alongside us. They work with us to make sure that we're reporting in the right areas. We're putting the reports together with group risk and compliance. So I feel very fortunate that I'm surrounded by people who help us in that regard. I just think, as to Graham's point, is that a barrier to entrance to the market now? The length of time it takes to get authorized, and then the ongoing work around compliance is not insignificant. And I think, as I said, we're at a point where I think things can change. Ironically, we operate across Europe and UK, and it feels like to me that UK is by far the most regulated, and that my colleagues in Europe are less sort of engaged in that regard. Not less engaged, but have a less onerous responsibility there. And I think the reporting's there. It's got to be done. It's like the MOT for your car. You've just got to get on with it. So we just get on with it.
Yeah. Okay. And Jane, obviously, Aon is a big beast of a broking firm. How are you at Aon handling the scale and the pace of regulatory change? And are there any areas particularly that we haven't talked about that you'd like to see simplified or clarified?
Well, I massively welcome the direction of travel, because, as you say, as such a large firm, I understand, why we have an awful lot of interaction and scrutiny from the FCA, because we have the potential, if we get something wrong, to damage confidence in the market. So I completely accept that. However, Zach's point was a brilliant one, which I actually also have responsibility for our Irish operation, and so how do we cope with the volume? I'll give you a feel. We did 300 returns or submissions to the FCA during the course of last year, whereas our Irish operation did 50. So if it gives you a scale of the difference of actually what we've got going on in the UK, and we reckon probably the cost of that regulation for us it's probably about 10 or 15% of what would be our profit in the UK. So it's very costly, and that ultimately, is being passed on by all of us to customers. So there's, I get absolutely the need to make sure that our industry is, a really that we're looking after customers, treating them fairly, doing all the right things. But there's sort of a balance, isn't there? And there's sometimes unintended consequences actually that impact customers from, if I'll give you an example, early days of fair value assessment, we were being very, very, very strict in the way that we approached that, maybe compared to some other firms. So if we hadn't had an updated fair value assessment response from an insurer, then we would take a decision to stop offering a product to a customer. Well, that actually might be a customer who can't. Some of these products actually were, public liability for a soft play area. We might be putting companies out of business, not because we know the product is a problematic product, just because the process is, we do, the decision for me as a CEO is, do I take the regulatory risk of breaching one of the regulations, or do I do something that could cause detriment to a customer? And that's actually quite a tricky, and I would always say I'd probably prefer to take the regulatory risk, especially if I've done my part of a fair value assessment and this is a renewal of a fair value assessment, But we have to start having those conversations. So I guess how are we handling it? We've got a fantastic army of people because of the size of our business that interact every day with the FCA, but massively welcome the direction of travel. And I've actually felt some of the really good intentions from the FCA when we were doing our Griffiths and Armour acquisition. We talked to them about how important it is when you're doing an acquisition to be able to move quickly, because once the news is out there, actually you want to be able to settle down clients, settle down staff, all of that, be able to tell the story. And until you get your change of control application approved by the FCA, it's hard for you to actually get on with it. So, and we talked to them about that, and said actually the Bank of Aon, which is a global bank of Aon, could choose to invest in any country in the world to make acquisitions. And if it's harder to do it here and takes longer and there's more risk, then they won't invest here. And they were very, very responsive to that. And I honestly think that there's a good intention to try to help us to be more competitive and more comparable to other countries.
Great. Okay. Thank you for that. And we know from conversations that we've had with brokers that business placement is an issue that's grown in importance since Consumer Duty came into force. Zach, how do you ensure that your brokers have the information they need about how insurer partners are performing when it comes to the metrics that are relevant to Consumer Duty?
Yeah. So as Jane mentioned there, we have an army of people who review our customer data, our Consumer Duty data. We review that against the insurer scores, and then we build that into our broking strategy. We have a team of people, our market team, focus entirely on the performance of insurers and partners. We focus on their products and services. We focus on their impact to customers, who eventually get involved, and then we then have to implement change by looking at our broking procedures, looking at how we monitor insurance, and then obviously educate the team in terms of the reasons why we may be moving away from a certain provider, explain that, and then those we've subsequently changed our question sets around our quality audits to make sure that our brokers are making the right decisions and that we're taking on board the results from Consumer Duty data that we have.
Okay, thank you. And Matt, what advice would you give to any brokers who may be struggling with this kind of growing regulatory burden?
Yeah, I think it's, I suppose, about being smart in your approach, and probably particularly important if you don't have the armies that Zach and Jane do alongside them. But data and technology can allow people to work a lot more efficiently, and it can also empower brokers to be more informed about the market as well. So that can lead to better decisions, which helps to lower the regulatory risk, but it also can help to minimize compliance costs. And with kind of productivity, stalling a bit and growth being a bit harder to find in the current market, that that's particularly important. And we help brokers a bit with that. So we provide access to a range of different performance metrics, so kind of customer experience, complaints, underwriting, claims. But it's really using it not just to kind of tick the boxes or choose where to place business. It's also about evidencing those choices as well. So it provides that kind of that extra level of assurance, and evidence was something that the FCA mentioned quite a bit on their webinar this morning. And the data we have is a lot of the data that the FCA looks at as well, and that can be very powerful. They use it to spot outliers, and kind of brokers can use it as well to spot I suppose, the businesses that they should or even, shouldn't be working with. But it's all about kind of using data technology in a smart way to be as efficient as you can be, and not kind of just relying on the anecdotal examples that, might take time to get, and also maybe not as robust or won't stand up to that scrutiny. And that's kind of particularly important, I suppose, for those smaller firms as well.
Great, thank you, Matt. And before we move on to the next topic, just a reminder to everybody that's tuning in to submit questions to our panel through the Q&A function. But moving on now, so one of the other challenges facing brokers is the soft market. We're hearing a lot about that. Premiums have fallen fairly dramatically across a number of different business lines, and lower premiums obviously mean lower commissions, but it also clearly represents a better deal for the customer. So Jane, how do you balance the pros and cons of that from a broking firm's perspective?
Well, I think the soft market is actually a great opportunity to revisit with clients things, uninsured areas, underinsured areas, work that maybe as the premiums have gone up, they've not invested so much in risk management work that we could support them with. So I actually think the market cycle has a natural sort of counterbalance of where brokers still come into their own. I think in that very hard market, when often brokers that are earning commission are seeing an increase in that commission, they're often having to work a lot harder as well to get the client the very best result, or to find the capacity or the insurer, or maybe they're having to do extra risk management presentations to insurers. So I feel like there's always like a counterbalance. Equally though, I think from a management point of view, what we're obviously also seeing costs increase for our main cost being our brilliant talented colleagues, and there's been quite an increase generally due to probably a bit of a lack of talent in the market over the last few years in salaries. So I would also say that we need to not be afraid to make sure that our clients understand that whilst we might be earning commissions, sometimes we might need to ask them for top-up fees, or we might need to increase our commissions. And as long as we're open and honest and doing the right things by clients to get them the best deals, then I think those strategies all need to come into play.
So it's interesting there, Jane, that you mentioned talent, because we've just had a question on that very topic. So I'm going to feed this in right now, and it's also linked to the FCA, and it basically what this person said is, with the FCA excluding a formal mandate for DE and I, how do you anticipate this will impact the talent pipeline for regional firms, particularly, given that the responsibility now rests more heavily on employers? I don't know if, Jane, you want to answer that, or if anybody else on the panel does, but by all means, just jump in if anybody does want to answer that.
I'll happily go first. I'd say for a lot of the firms and BIBA member brokers that I speak to, and I think being inclusive and using that to get to a stage where we're more a diverse profession, I think is top of everybody's agenda anyway. I think that's certainly the case now, and I'd say it's part of our core values to be an organisation, a place to work where people can come and be themselves, whatever that may look like and be. Yeah. So I think it's about inclusivity. I don't think because Trump's not doing it today, or because the FCA are changing their view, or the government is doing it, I don't think that changes what we all know is the right thing to do, to continue to be inclusive and to make people feel that they can be themselves.
I agree on that point. Well made as well. Far better articulated than I could. But I don't think we need a mandate as an industry to do this. It's the right thing to do. So we just get on and do it. I think that's, I understand the concern, and it's something that we've spoken about in our business, and every business will do it, but we've just got to do the right thing.
And from our perspective at BIBA, despite changing winds in other countries, it's still a big part of our manifesto. It's a big commitment for us.
Yeah.
We launch our ESG policy every year. We refresh it and update it. So we're fully committed. And what I will say is our advisory boards and our committees have never been so diverse. So I think we're actually in a really healthy place. I think the membership has really bought into it. And I hope it just becomes business as usual for us all anyway.
Yeah,
Yeah.
I think aside from it just being the right thing to do, which obviously, utmost importance, I think people are more aware of their benefits from a business point of view now as well. It's kind of been documented
correct.
for quite a few years. And I think as well as being the right thing, it also makes business sense, and people see that now. So hopefully, even without that kind of regulatory directive, people will still be moving towards that. And I think we're seeing that. Oh, and it looks as if, he's back.
I'm back. I thought I'd mess around with you all. Okay, so Graeme, going back to the soft market, I know growth is a big topic for BIBA, something that our research has shown to be stalling just ever so slightly. How do brokers deal with this in a soft market, particularly when these conditions often create more work for brokers too?
Well, I think in a hard market, it's really difficult to sell certain classes because clients have a limited insurance spend. So if you might be trying to push cyber insurance or intellectual property or something like that, then they're going to say, no, thanks, I'm just going to stick to my EL, PL, property, etc. But now, hopefully their spend can go a little bit further. I think it's a really good opportunity to push things like cyber because it's massively undersold, and it is a huge threat. And we have seen major national high street names continually being attacked, not able to sell. And the good thing about cyber is it's not just, a check you're right and give your client. It has horizon scanning. It's a whole service. If you do get an attack, it can recover your data. It can get your IT back up and running again. It can help with your reputation. So I actually think it's an opportunity for growth in particularly cyber, because I do feel we're quite vulnerable in that area. And of course, we're seeing a big growth of MGAs as well. So there's more products, there's more capacity coming in, and so there's more choice for brokers as well. So as Jane said earlier, it's really hard work right now. Brokers are working so hard across the market, as are the insurers. But actually, it's a good opportunity to get these people on risk. And I'd say the other point I want to make is there's a lot of people that are underinsured, and also because of issues like the Suez Canal or whatever, and there's a lot of stockpiling being going on, and they don't have those correct sums insured. And so now is a time to try and correct that and make sure people have the right cover, because that we have seen some incidents where clients are just trying to spend the absolute minimum and they're resisting having suitable cover. And of course, then there's a potential of a PI argument there. So we don't want to see that either. So it's actually a good opportunity for us all.
Thank you. And Zach, how's PIB approaching the soft market?
Aggressively. No, I think the points, a couple of the points have been made. I think there's a really important part here around communication with clients, and I think making sure that we're close to clients, but explaining the why, because I think it's easy, or it kind of an easy thing to say, well, we've saved you premium, or your costs are down this year, and we look like rock stars. But I think it's really important we explain the background to that around the successful years insurers have had, and the fact that they're perhaps expanding their footprint from a risk perspective. Because I think if you can have that conversation with the client, I think the important part is that whilst there may be various options that they have, it's really important for me that the client looks at the correct long-term partner for them. And I think sometimes we see insurers will, as I say, step outside their normal areas of underwriting restrictions, if you like. But at some point, the market changes, and the market changes, turns hard, and you're with an insurer who you're not in their core business, and then you've got a tough decision to make at that point. So I think open communication with clients, explaining the why of the change in the market, And as Graeme and Jane have already mentioned, the fact that we've got potential savings there, this might now be an opportunity to revisit the underinsurance, which we know is a huge issue for clients. Again, look at cyber, and Graeme's given a textbook response as to the value and why organisations should buy cyber insurance, not just for the protection at the end. That can be one of your points on there, Matt, in terms of a short snap. But I think it's just having that conversation with the client around, actually you can take some of that saving and expand the protection that you've got in place for the business, and improve their program, rather than you just take the saving, and with a market who may not be comfortable with them in 2-3 years time when everything changes again.
Thank you. And now let's turn to the crazy world of geopolitics. There's been a lot of uncertainty around that, obviously. But Laura, how do you think brokers, or what impact do you think it's having, this geopolitical uncertainty on the insurance market? From all this geopolitical upheaval that's going on around the world, is it having an impact?
Well, I certainly think it feels like a bit of an unprecedented period in the world. We had a Deloitte webinar a few weeks ago, and they had some statistics, something like there's 110 military conflicts going on in the world at the moment, 8 million cyber attacks on UK business infrastructure in the last year, and 75% of the population live in net fossil fuel importing countries. So if you look at those sort of combined, that's quite a sort of scary prospect in terms of vulnerabilities. I'm not sure, though, we in our role have seen that much impact on the insurance industry so far, and particularly as much as we've seen in other sectors. But some of these trends, particularly the political trends, I think they've got much more potential to escalate potentially over the next 12 to 24 months. So we're starting to see some of our broker clients plan for that and start getting their head around the medium-term impacts on their business and what they might need to focus on. But I think we haven't yet seen the full impact of some of these changes. So I know there's some debate in the industry around things like war and how it's defined in exclusions, whether that might mean some of the supply chain are uninsured, and those sort of more pointed topics. But I think some of those areas, until we get into claims litigation, you're not quite clear on how it's all going to pan out. But I think on the upside and the positive angle to this is that this sort of instability and difficult period for businesses and governments is when the insurance industry is at its best at innovation. And I think products such as credit cover and political violence and terrorism and sort of risks are when those sort of products really show their value. So I'd like to see, I guess, the industry probably focus more on that in terms of seeing how it can help with this instability and provide products that can add value during this difficult period.
Okay, and Graeme, how can kind of organisations like BIBA and other trade bodies help with this?
We have a red telephone to the Treasury insurance team. We have a hotline with them, and we, over the years, there've been so many issues, whether it's a Icelandic volcano or COVID or Brexit or whatever happens, we stay in close touch with all the relevant government departments. And of course, we like stability as an industry. I think where we're seeing an effect now is on investments, for example. Investments are down at the moment. That's quite important for returns for many regulated firms. So we put guidance out to try and support members and make sure that they're aware of what's going on and what to do. I think the most practical effect that we're seeing with instability is supply chain. So delivering raw materials, parts, getting Jeep Cherokee parts from America, for example, or wherever from around the world, it's taking a lot longer. So then you look at the knock-on effect. It takes longer to repair a vehicle, so they have a credit hire vehicle for longer. That costs more. If you need building materials to repair a property and you're in alternative accommodation, then you're paying for that for longer. So it puts up the costs for insurers, which those extended periods, which ultimately has an effect on premiums. And then before you know it, the government's announced the Motor Insurance Task Force, which we are now very involved in, talking about what the issues are, where could we perhaps assist, where could government help with some external support and things like that. So So yeah, instability is challenging for the sector, but we do work, really well with the government and with the ABI to try and find solution.
Okay, and Graeme mentioned there, you mentioned about kind of the Icelandic volcano and touching there on climate change and weather volatility. So kind of focusing a bit more on that and emerging risks. Jane, I know Aon published its client trends report recently, which highlights how kind of weather volatility and climate change are kind of growing concerns. Are insurers and brokers keeping pace with this in terms of product innovation?
Yeah, I think I'd say we're getting more and more, we're getting better and better at modeling, using data sets to help advise our customers. I think the insurers are also using those models and data sets, which actually may make it harder sometimes for us to do what we want to, traditionally do. I know we're potentially going to talk about it later, but, it used to be this theory that the premiums of the many pay for the claims of the few. And when you start to get so granular and you can predict where the claims are going to be, it makes it very hard to continue to pursue that principle. Innovations around products and things. You look at UK, and flood is obviously still a big challenge for us. And I'm actually going to a CBI event this afternoon with Ed Miliband, and I'm sure he's going to talk about probably spending cuts and what is the investment going to be in continuing to sort of move towards things like our net zero and thinking about our investments around climate. But I guess you look at things as simple as Build Back Better, in which something BIBA again have been lobbying for a long time. But we as brokers can easily negotiate, even on individual case by case basis, where we could include things like that in insurance policies, so that if somebody has suffered a flood and we see more volatility there, so maybe unexpected, but you'd love to think that we were helping to improve the position so that if it happened again, that the loss isn't so bad. And so yeah, I think we're keeping pace. I think it becomes harder. This sort of protection gap in lots of areas becomes harder the more granular we get with the data that we have. So it's more about risk avoidance, risk mitigation. How can we give clients advice? Lobbying the government on where not to build houses in flood areas, and so yeah.
Okay, thanks. And good, going back to you, Graeme, on this. Do you think there's enough support for smaller firms who are dealing with this increasingly kind of localized and unpredictable weather risks?
So, I mean, I'm worried about what's going to happen with Ed Miliband this afternoon now. But look, the government are going to build 1.5 million new homes during their period in office, and that is a lot. So we absolutely need them to keep up their investment, but increase their investment, because flood re is only temporary anyway. And the whole point of flood re is that we become resilient to flood as a nation after the 25 years. Now, they've increased the spending on resilience and resistance and defences a little, but what we're seeing is local authorities not really sticking to the planning guidelines, and they're quite happy to wade through another 10,000 houses to be built in their region. And these houses can be built in higher risk areas. And that includes small businesses as well. So that's our big concern. Insurance isn't guaranteed for any of these things. Flood re only covers properties built since 2009 and doesn't cover any commercial properties really. So at BIBA, we've launched a scheme to cover flood risk properties, and that would cover the sort of the full commercial risk, or it could cover, you could just buy an element of flood cover, like £25,000 if you're a very small business. So that makes it more affordable for a small business, and I hope that would help them. But it is challenging, and I think this government has a responsibility, because we are an island and all our major towns and cities are on rivers in the north. So we need the government to do the right thing here.
Yeah. Okay. Now, time is fast approaching, so it's 10 to 3 now. We've got until 3 o'clock. So I'm going to move on to a different topic now, but related, and talk about data and technology. Obviously, insurance has always been a very data hungry industry. But with the advancements in AI that we're seeing and the increasing type and volume of data that's now available, we're seeing lots of developments that are helping to create better products and be more efficient. Zach, how are you seeing AI and data being used to help the industry improve its offerings?
I think I'll be interested in the point Jane's already made around are we getting too granular in terms of data, and does that become damaging? I think from an AI perspective, I think there's definitely a move towards AI starting to take some of the general admin tasks away from people. And we are seeing that freeing up time to spend more time with clients and articulating some of the challenges. Just going back to the point that Matt made earlier around productivity, it's interesting that despite those improvements, that we're sort of seeing productivity flatline a little in that regard. I think, but as AI grows and becomes more integrated, I think we've got to be really careful with, in terms of systems we have which allow policy comparisons and can support teams in sort of providing better quality information to clients. We've got to make sure that we maintain that as a co-pilot system rather than being a direct to client piece, because we're still responsible for the advice we give. So I think the data and AI we use can help with that, but I think we've got to make sure that is helping us support clients, and that we're still giving that advice to the clients.
Thanks. And Matt, how do you think brokers should be thinking about the data strategy? Is there anything else that you think they need to be particularly kind of aware of?
Yeah, I suppose you need to be kind of smart in your approach. You can't go out kind of looking at all the data that's out there. For one, you have the granularity problem, but also there's so much out there these days, you just can't manage it. So you need to focus on what's relevant and also on, I suppose, what's reliable. And think about the consistency of the data too. So, is it comparable across different businesses? I think, Laura kind of mentioned that from an M&A perspective this morning as well, but I think it applies to kind of all areas of data really. And that consistency can be a real challenge. We know that from some of the work we do. But if you have that clear approach, you have that joined up approach in terms of the data you're using, then that can help to use that data more efficiently and maybe help with the productivity side of things. It can avoid duplication across different parts of the business, confusion as well, which kind of slows things down. And it also means less time kind of spent chasing answers and more time adding value to clients, which ultimately is what kind of broking businesses are all about. So from a regulation point of view, it's not just box ticking as well. I think that's an important thing to remember. Using these right kind of technologies, this right data can actually improve outcomes both for customers when used in the right way, but also for the business too. And I think they're equally important, particularly in a challenging market.
Thank you. And Laura, is there anything that you're seeing around how AI and data is being used to help the industry improve its offerings?
I think it's still very much the early days, and I sort of agree with Zach. We're mainly seeing it in sort of back office processing. I think what I just sort of caution really is, as well as sort of continuing to have that customer facing element, is that rather than just sort of recreating procedures and processes we do today, I think it's almost like a sort of professional tennis player. You need to sort of deconstruct what you're doing, see if it's still working, and then sort of reconstruct it in a different way. And so getting the right sort of data scientists and AI people to sit alongside those that know the market so well and sort of challenge us on other different ways we could be introducing new data or doing things differently rather than just recreating what we do already. I think it's a mindset change as well as a efficiency play.
Okay, thank you. Now, I'm just going to move on to the last subject of today because we've only got 4 minutes to go, and we could probably have a whole session just on this particular topic, and we've got 4 minutes. So M&A, it continues to dominate the insurance news agenda. So before closing off, I just want to turn to this topic because it seemed to slow down a bit at the beginning of the year. It's now appears to have picked up again. Laura, how do you see M&A evolving for the rest of the year in terms of volumes and valuations? And do you think that the Labour government is having any impact at all on the levels of activity?
So I guess starting from the context, 2024 was a record year, both in terms of deal volumes and valuations. But I think we're still pretty optimistic about 2025 and where that's going. 2024 was a lot of smaller acquisitions where a lot of the consolidated brokers in particular did a lot of smaller acquisitions where they could get those quick revenue synergies and achieve sort of good multiple arbitrage, whereas you saw a bit more of a mixed picture in the sort of mid and larger size deals. I think particularly one of those challenges is around the ability for some of those PE businesses to see an exit in a listing. And I think actually there's been some queries around, are certain brokers too big because the exit options are therefore a little bit more challenged. But as I said at the beginning, for those brokers that do have the right sort of attributes, we've seen some real top end multiples. And people will pay for those high quality businesses. And I think that's going to continue into 2025. I think that will also include sort of continental Europe and beyond, where I think, you know, there's a lot of activity as well as people grow out their international presence. So I'm fairly optimistic about 2025. And I think what we're seeing is firms preparing better for those processes and making sure that they know what they want when it comes to acquisitions. And I think that will help support sort of multiples in the longer run. In terms of the Labour government, I'm not sure we've seen that much sort of materialise in terms of direct impact on M&A, but, you know, their focus on creating a pro-business environment and, you know, creating competition and a strong regulatory framework that supports innovation and all those positive messages, I think should hopefully keep that momentum going. So I'm optimistic that, you know, the tone from the top and the government will continue to support those trends.
Okay, great. And Zach, PIB isn't exactly a stranger to M&A. Is there anything you want to add to what Laura just said there? But also, it'd be interesting to know what you look for in the acquisition targets.
Yeah, I think as Laura says, I think the M&A activities, it's an interesting one. I think our focus at the moment is more into continental Europe. I think just because of the opportunities there. I think in terms of the targets we look for, you know, almost defer to my answer at the outset around what's a strong performing broker. You know, we look for brokers that are performing well, have a good, stable senior team, longevity of clients. And I think the other point, and we used to ask the broker, what are they famous for? That was always our sort of catch point. But it's almost those brokers who have got a specific area of expertise, because they then have a client base that they're doing more than just providing insurance. They've got a real genuine understanding of the sector. Adding value to those clients means that the retention is going to be comparable or better than their peers. So I think that's a major part of it. And then we also look for talent and look at talent within that senior team who can potentially add value to the rest of our business, and who can move on into different roles.
Okay, thank you. And Jane, Aon re-entered M&A with a move for Griffith and Armour, which you mentioned earlier. Are we going to see more deals from Aon in the near future? And what do you look for in acquisition targets?
We're obviously sort of more strategic in what we're looking for, and what we're looking for is stuff that's really complementary. So if you looked at Griffith and Armour, we were like, okay, their PI business is really good at architects and engineers. Our PI business is really good at accountants and solicitors. You know, that brilliantly complementary. You know, now and we were good at big, and they were good at slightly smaller. So we can now go after the bigger architects and engineers and the smaller accountants and lawyers. So it's just, we're looking for a really, really high quality in the businesses, and probably maybe slightly bigger as well. And will we be doing more in the future? Never say never. We're always looking for the right thing. I just say we're probably a little bit more picky than most.
Interesting. Okay, we'll keep an ear out for what goes on there. And that actually brings us neatly to the end of today's session. So many thanks to Graeme, Laura, Zach and Jane for joining us today, and to everybody for tuning in. Look out for our broker report. It will be included in next week's Insurance DataLab newsletter. And just a reminder that our benchmarking platform at Insurance DataLab provides lots of insights on the performance of insurers and MGAs, which can support business placement strategy, increase confidence in insurer partners, and to help protect firms against regulatory scrutiny. And brokers can benchmark their own performance against individual peers across a wide range of metrics. If you'd like a demonstration or just want to find out more, then please do email me at dan@insurancedatalab.com. But all that's left for me to say is thank you again for watching, and from Matt, me and the panel, goodbye for now.
Thanks.
Thanks, Dan. Thanks, guys.
Bye-bye.